Hey, Talofa Lava. My name's Leotalva Dr. John Peterson, and you're watching TE2 Edge Sports Cards. If you haven't hit the like or subscribe button, please do so. I'd love to get you on board. I've been mentioning in my last couple videos and live streams that over 50% of the people who watch my channel do not subscribe, so I'd love to have you subscribe and get you on board. I'd love to have more folks follow the channel. So this morning I wanted to talk a little bit about, just very briefly, not a long video, talk about Blackstone. You've heard me mention Blackstone in prior videos, and I wanted to provide an update on what's happening with them and specifically their real estate investment trust. I'm not a financial advisor. I'm not an economist. I'm not even a financial I'm not a financial advisor or economist or analyst on anything. But I do have a realtor's license, and I follow the real estate industry from time to time, and I try and keep myself educated about what's going on and up to speed with what's happening in the market. I did want to share this with folks because it does have some potential impact. I say potential, doesn't mean that it will be a direct impact. As you all know, last summer, 2 summers ago, July of 2021, Blackstone purchased CCG. I think they paid maybe 500-600 million. It was an investor group, so Jay-Z, at the time the president or owner of, or not president, I can't remember. Somebody associated with the Philadelphia 76ers. I don't know if it was the general manager, the president, the owner. I think one of the two, one of the three. But there was an investment group that came together that bought out. That bought CCG. So technically, CCG is owned by Blackstone, and there was a lot of press on that, and I've shared that on prior videos. So there is this relationship between CCG and Blackstone. There's also a relationship between Blackstone and Fanatics through Michael Rubin. So you kind of have to triangulate those three things to understand the role that Blackstone plays within the sports card trading industry and the grading industry. So I've been a real big fan of that move. I think that CCG has been around for a long time, and I love the CSG slabs. I think they're fantastic. I think they're the best in class for sure, in my opinion. Of course, they're still new, and the liquidity of moving those slabs is still relatively low. But let's be honest, moving any slabs right now, the liquidity of moving any slabs, or the liquidity associated with slabs right now is low. U.S. Treasuries aren't very liquid right now, and they're like one of the most liquid products on the planet. So we're kind of going through a time here, especially with the inflation and the interest rates increasing, where it's becoming harder to move things. And I've seen this just in my own experience, my own limited experience selling cards on my slabs. Just in the last probably 3 weeks, things have really kind of come down in terms of the number of sales that I've been doing. Prior to that, I was selling quite a bit. Am I worried about it? No, not really, because I'm in this long term. I'm not in it for a short-term flip. But you are seeing some people online, whether it's my slabs or whether it's eBay or whether it's auctions, who are panicking a little bit and getting into that fire sale mode of dumping cards that they don't want to lose anymore on. They can't lose anymore on. In order for them to stay liquid and whole, they need to sell some of their inventory, sell some of their cards or all their cards, which is unfortunate. The pandemic was a once in 100 years event, and everybody who really experienced the pandemic the first time was not around to tell us what to expect this time. What I will say is this, though. You have to remember this. The pandemic hit in 1919. It was the great influenza of 1919, 1920, 1921. And as quickly as the virus arrived back then, the same type of speed was felt when it left. It was kind of a mysterious thing. Now, we know more about science and more about COVID and more about viruses now than we ever did before. And so, I think we've got a better tracking for what we're dealing with. But right now we're dealing with influenza, RSV, and COVID still. And it's going to be kind of a tough go maybe here for a little bit. But, we have to stick with it. I will say this. After 1919, 1920, 1921, there was a huge increase in the market. And that became the Roaring 20s. So now be paying attention, because there could be opportunities to buy if you have cash assets, if you have capital. This could be an opportunity to pick some things up low and potentially see them rise. Is there a direct corollary between the 1920s and the 2020s? I don't know. It's exactly 100 years difference though, right? And usually these things run in cycles. Every 400 years, every 500 years, every 100 years, every 20 years. So I did a history major at River Falls, and as part of my undergraduate program, and there are some patterns and cycles that seem to repeat themselves in history. So all that being said, I wanted to share that Blackstone had to limit withdrawals from their $125 billion real estate fund. So Blackstone has like 5 different things that they do. One of them is private equity associated with real estate. And it's about $125 billion, approximately 7 to 8% of all the assets that they manage. So it's not the biggest piece of Blackstone, but it is an important piece. And some would say that they are kind of a bellwether REIT, real estate investment trust, within the real estate market. So let's just go through this quickly. Blackstone will limit investor withdrawals from its $125 billion real estate investment fund following a spike in redemption requests. Basically, redemption requests are rich people wanting some of their money back. So, if I'm concerned that, the price of something's going to continue to drop, I'm going to go in and say, I want my share back, right? So that's a redemption request. Blackstone on the real estate side basically owns holdings, a lot of apartments, and when the rent on those apartments comes in, then people get paid out, people who are investors. So Blackstone's going to sell its stake in 2 Las Vegas properties. This is kind of big news. The firm announced earlier its sale of Mandalay Bay and the MGM Grand Las Vegas Casino. Only 0.3% of the fund's net assets will be available for redemption in December, according to a notice sent to investors Thursday following a surge in requests in November and October. So this has been 2-3 months now of people wanting redemption, making redemption requests to get their money out of Blackstone's real estate investment trust, REIT. In October, Blackstone received $1.8 billion in redemption requests, 2.7% of the net asset value, and has already received requests in November and December exceeding its quarterly limit. That was from the Financial Times. Only 43% of redemption requests from investors were fulfilled in November, totaling $1.3 billion in assets. Following the announcement, shares at the company fell by as much as 10%. So Blackstone shares on the public side have taken a hit as a result of this information. Blackstone will receive $1.27 billion in cash, generating about $730 million for shareholders from Vici Properties Inc. for its 49.9% stake in the MGM Grand Las Vegas and Mandalay Bay, 2 properties valued at $5.5 billion total, to release Thursday. Here's a couple quotes. Our business is built on performance, not fund flows, and performance is rock solid, a Blackstone spokesperson told the Financial Times. $69 billion, that's the estimated value of Blackstone's assets across logistics facilities, apartment buildings, casinos, medical office parks, warehouses, residential. Forbes estimates the real estate firm totaling $15.5 billion in revenue through 2022. Blackstone Real Estate Income Trust, I'm sorry, I said investment trust, it's an income trust, rose in the real estate industry with its inception in 2017, quickly acquired apartments, suburban homes, dorms, etc., etc. Investors have become increasingly more cautious about accumulating money and assets that are hard to trade and value, while Blackstone continues to place more limits on access to its funding. Because of the 2 Las Vegas property sales, in addition to the early $5.6 billion sale of the Cosmopolitan, the firm now has access to more liquid assets, potentially allowing it to redeem more requests in the near future. So here's the thing about these redemption requests. they make it very clear that they can limit at any time the amount of money that you can request to have redeemed as an investor. And that's something that's pretty common in the real estate industry. Um, you know, they can't default. So if there's a run on the redemption requests, just like a run on the bank, I mean, here's how it works with a bank. You all know this. A bank is insured up to $250,000 by the FDIC or something like that. 250, 275, 300. I'm not exactly sure what it is now. So what happens is a bank doesn't have that much money in its vault. So if everybody wants to get their money, the bank has to, figure out a way to pay people out. And sometimes you can get a run on the banks and there isn't enough money and you can't get the cash that you need. That's why it's important to consider where you put your assets. You want to diversify how you have your assets held, in my opinion. And again, I'm not a financial advisor, but you want to make sure that you've got them, you know, uh, put away in different baskets or different buckets. Some banks have a one-to-one correlation between the amount of money that you put in and the amount of money that they have on hand. And some of those are offshore banks, like frankly. Most of the traditional banks, the bank that I use, Wells Fargo, they probably have a couple percent of the total amount of money that's been invested in them. So, but that's normal. That's the way that the system works, and they gather interest and they make sales and all that sort of thing. So, in the case of Blackstone, and again, I'm not an expert in this. I just do a little bit of real estate. I have a realtor's license, so please don't take anything that I say as like the word of God or anything like that. But basically, some people are concerned because Blackstone has initiated this limit to redemption requests, which frankly is a part of the industry. It's not any big surprise. It still doesn't make investors happy though. It's like a vault for cards. If you got your cards vaulted and I want my cards taken out and you want your cards taken out and everybody who keeps their cards in the vault wants their cards taken out, what happens to the vault if everyone takes all their stuff out at the same time? Well, the vault could default because the vault is created based on the holding of assets. So that's why I'm a little reticent right now to invest a ton in the market, just because I don't know how liquid and how easily I can get my assets back. It doesn't mean that I don't follow the market, and doesn't mean that I don't invest, because I still do. But I'm reticent to like put money in a place or put cards in a place where I can't withdraw them whenever I want them. So that's just something to keep in mind. But again, there's fine print and there's big print that goes with these sorts of things, and you have to be aware of what those different types of print have to say. If you put money into Blackstone's real estate income trust, then you have to know you can only take back 2% or 3% or whatever it is at given time if they initiate the limiting of investor withdrawals. So how does this impact the card market and sports cards? I don't know if this has any impact, frankly. It could be just a real estate thing. Again, Blackstone has $900 billion in assets that they manage. Their net value, at last time I checked, was around 115 million or 115 billion, excuse me, as a company. So is it something to be aware of? Yes, absolutely. Is it something that is a signaling doom for the real estate industry market? No, not necessarily. But if this continues as a trend, quarter after quarter after quarter, you have to pay attention to what's going on. And right now we're at 3 consecutive months, which is a trend line, right? 3 data points make a trend, not 2, not 1, but 3. And so this has been something that's happened in October, November, and now December, the limiting of the redemption requests. I say this because Blackstone owns CCG, and CCG has CSG. right? And I'm heavily invested and leveraged with CSG. So be aware, it's not a fire sale on CSG slabs. I mean, CSG slabs are hard to move as it is right now anyway. So you can't go out there and fire sale and just give stuff away. You know, it's not a smart move. But on the buying side, if this does have a negative, and that's a big if this does have a negative impact on CSG as a result of what's happening with Blackstone, you could see the prices for CSG slabbed carts decrease. And that, my friends, could be an opportunity to buy. If you believe in the quality of this slab, right? If you believe that this slab and this company and their relationship with Fanatics and eBay is going to continue to deepen and strengthen, when the price drops, if the price drops, look for that as an opportunity to buy. Remember, you want to buy low and sell high. And right now, things tend to be trending down. Not in every aspect or index of the sports card market, but some of them, yeah, there's a downward trend. In many ways, it's a correction to the market. Things went up so much during the pandemic, right? I mean, the market just skyrocketed starting in 2020, about mid 2020. It peaked up around March, May, April of 2021, stayed pretty high, had another little tiny peak at the beginning of last year, and now it's kind of coming down. So really, we're not even close to prices pre-pandemic. Just look at the indexes for modern, vintage, et cetera, et cetera. We're not even close to that. So is now the absolute time to buy? I don't know. It depends. How far is the market going to drop for football, as an example? So you just kind of have to watch. You have to make strategic moves, and you have to pay attention to what's happening. And that's why I wanted to share this information with you all from Forbes.com. So just so you know my sources. All right, that's all I got for you guys today. I was going to do a live stream on this, but I figured I might as well just do a video old-fashioned way using my microphone that I got for my birthday. And it seems to be working pretty well. So hit the subscribe button, hit the like button, leave me a comment. Again, I'm not a financial advisor. I'm not an economist. I do have a real estate license. I own my own small business. And, I've got a couple degrees. I know a little bit. I know a little bit and enough just to be dangerous. So peace out, folks. Have a blessed Sunday. I'll get on and do a box break or something of that nature a little bit later. All right, peace out. One love.